Yesterday, the Fed decided to raise rates 0.75%, which is the largest hike since 1994. Now, the market had kind of priced that information in starting last week. What I got up on the screen is an hourly chart of the S&P 500. And this goes back to last Monday right here. And this is last Thursday when the market started selling off. It did so on the CPI, rumors of the CPI numbers that came out Friday that saw that continued move lower. And that made the market essentially think that the Fed was going to have to do a 0.75 rate hike instead of 0.50, which at the beginning of last week, the market had priced in a 0.5% raise at about 93%. And by the end of last week, they had a 0.75% priced in at about 95%. And that's what we got yesterday. And you can see this is the Fed announcement candle. We made a big move down. We made a big move all the way back up and then closed that hourly candle right where we opened. So a lot of no action, right? Big move up, big move down to go essentially nowhere. The lows held, and you can see where this high ran into. This resistance zone here held. Now, overnight, the UK increased their rates by 1.25%, which was a lot more than the market was expecting, and we saw overnight a strong selling. So yesterday we didn't really get much of a push whatsoever off of that Fed news. It was extremely weak, and then overnight we actually went and made a new yearly low on the S&P 500. I'm going to back this chart up now. We're going to look at it on a daily time frame. You can see that low getting taken out. I'm going to pull up the NASDAQ now, and you can see we didn't quite take that low out. And this is the level everybody's got to be watching here today is, will the NASDAQ take the low from a couple of days ago out? The Russell did make a new low, and if we come in and we take a look in at the Dow did make a new low. So overall, not what we wanted to see here. Gold, if we take a look in there, relatively unchanged, still in the middle of nowhere. Dollar saw an initial move higher and then has subsequently come back down. We saw bonds, which have been crushed, make a huge rally yesterday and then give back all of the move overnight, making a new yearly low there. And this morning, home builders came out with the information. Month over month, new housing starts crashed 14%. We have talked about this important 56 level. We're clearly underneath of that gap down, looking like we're going to continue to see fall. And new permits plunged 7%. Right, these are the worst numbers we've seen since back in here for the home builders. I also want today to check in on the transportation stocks. We have been watching this level very closely. We have gapped down right to the lows of the year. We're at that zone where any more weakness really can give us that open up to the downside back to the August levels in 2020 here, if we don't hold on to this zone. And we also want to take a look in at the semiconductors, which we've talked a lot about here. They are breaking now down to new lows for the year as well. They're losing this zone. And there isn't much support here until we get back around that 180 zone all the way down to 160. So this downtrend continues to stay in place. The bounce that materialized a couple of weeks back was sold sharply on hotter inflation numbers. The Fed gives us a larger than expected rate hike. If we were paying attention to last week, market has sold off sharply on it and looks like it wants to continue to head lower here. Everyone is worried about inflation. The Fed at least stepped up and did a 0.75, meaning they really want to take this seriously. But as we saw from the UK overnight, 0.75 might not be enough. We might be in store for another 0.75 rate on the next meeting and maybe the meeting after that. So we are starting to lose some of these major levels. The overall market itself, new lows for the year. Moving back down, and we pointed this out in a video last week, we're really watching this 3,500 level. This is that major breakout zone that we had in 2020. And we could very clearly have that breakout back test and this be the most important area on the chart. Whether we make a move up or whether we continue to break down will be seen here over the next week or two. So we're going to continue to pay very close attention to what's going on. It looks like the housing market is starting to slow. Mortgage rates are up over 6%. The Fed continues to hike. There is not a lot of good sentiment out there. Everyone is extremely pessimistic. And we are seeing prices kind of follow with that. Tomorrow's video, where we take a look at those weekly candles to see kind of where we are going to be closing after this week, is going to be very, very important. This market's been extremely volatile. We could see a turnaround here on Thursday. It is not out of the realm of possibilities. So that weekly close tomorrow is going to be really, really important, because if we close underneath of those major levels, it's a very good indication that the price pressure is definitely to the downside and more pain might be in store here in the short term. If you got any questions, want to discuss anything about the overall markets, feel free to reach out to me. You can reach me at mtedeschi at perspectivewealthplanning.com, or you can give me a call at 814-580-9881. Stay safe out there. We'll see you guys tomorrow.